Hey traders, this is Shane from NetPicks, and on the 24th of Jan, we had a webinar for the coaches from NetPicks, for all of you, talking about our 2012 outlook. And unfortunately, I had some technical issues that I could not attend, which is kind of unfortunate because I enjoyed it last year. So I recorded this one, and as you can clearly see, I've recorded it, and I'm going to go over what my presentation would have been. I'm going to just recap 2011, what I had planned on for the year, and see if I, stuck to my list. And I'm also going to cover personally what I personally think economically, and I'm also going to look at some tried and true methods that are going to stand the test of time for trading strategies. Okay, so let's just get down to business and get the ball rolling here. So in 2011, I had said that I had a few things I wanted to do. I wanted to find more opportunity to get in on the start of higher time frame swings. Now, the great thing about spot forex, when you can catch those trends, because forex currency trading is all about pitting one country's currency against another, and there's a lot of things that go into it. The macro look at the economies and just the health in general of the country. So if you get on the right side of those trades, they can run a long time. And so one of my goals was to take advantage of those kind of moves. Number two was, given the experience that the coaches have here at NetPicks, people trade everything from gold, silver, wheat. I'm sure there's soybeans. There's a whole bunch of different things. So it's really good if you're looking to get into different markets, to drop off an email or send them a message or whatever, to pick the brains and just to see what they think. So my eyes were open to gold, even though I always knew gold existed. It's just something I never traded, simply because I started in forex and continue with trading the currencies. I also wanted to explore the FX futures market for day trading. Push the FX spot to longer term plays. That kind of goes in with number one. Just like I said, looking for longer term plays in trading the currency markets, and utilize pure price movements at levels. Basically what I'm talking about there is, basically stripping down indicators, just looking at market structure, price points, sentiment, all that kind of stuff. Pretty much the epitome of professionalism when it comes to trading. A lot of the big time traders, this is exactly what they do, and you want to play with the big boys. Maybe not financially, but anyways, how did I do? I always like to look back. I do have a trading journal that I go through, and where I mark down my trades, what I did right, what I did wrong, and hopefully I can fix whatever issues I had in the next trades. And a lot of that is psychological. Some of it is also letting one ear listen too much to opinions of others or what I read. Sometimes that can be not very good. So let's see how I did on that. Finding more opportunity to get on the start of higher time frame swings. I gave myself a check mark for that, because you know what? I was really looking for that, because a couple years ago, or more than a couple, I think, I had a really nice trade in a currency pair, and it ran for 1,021 or 1,084 pips. It's actually one of my original videos I've ever did, and I like that because there's with the currency markets, things fluctuate on a daily basis. Rhetoric comes out, news releases come out. Someone like Geithner, like we saw before, had said something and the market's tanked. There's so many variables that can affect your day trading. So longer term trades, less stress. Once you're in them and you've taken all the risk out of that trade, it's pretty much just let the ball keep bouncing until the bounce is gone and you get out of the market. So my plays were in the Aussie US, and what I liked about that was the trade was fed with the difference in interest rates. So not only if you were long the Aussie US were you benefiting from the move, the increase in pips, but you're also looking at the interest rate that you were making as well. So that, because you obviously you own the one that has a higher interest rate, using the lower interest rate as basically a loan, quote unquote. That's just a very simplistic way of looking at it. But and as you can see here, actually still kind of marked off here, and I'm waiting for this area over here, see if there's going to be another one in play for this year, some sort of resolution. But I had spoken to Mark, who is the owner of NetPicks. I'm sure you've heard from him or seen his posts, and we talked about the Aussie US this year, and this is a trade that last year, and this is a trade that I mentioned him a couple of times, and it gave a couple of opportunities to get in to the move, get your profit, wait, and get back in. All right, which that's what you want to do, right? And I had my thoughts on this, and it was all long until it was pretty much dead. And charts don't lie. And also just keeping in your ear to the ground of just how Australia was doing. It really kind of helps knowing when to stay in and get out of a trade. Sentiment, right? Sentiment, long-term, short-term. All right, so for me, that was a big check mark. I was very happy with that. The Aussie was good. Failed. My gold. I was hoping to be more involved in gold in 2012, and I got to admit I wasn't. This is actually a picture that was from another presentation I did. I think this is the owners meeting in December of 2010, this chart right here. And this is where I covered trading supply and demand, looking at price points. And one concern I had was the sucker buyers here. There were a dime a dozen here. People just buying and getting suckered into these moves. The market was plunging up, and people bought. And I actually put them, this is 2010, okay, December, sucker buyers, and the market dropped off again and then finally rallied up. So there's a couple of areas I would have looked in here for a buying opportunity, but also had these areas marked off in here. And I got to say that I did not take advantage of what gold was offering in 2011. And so that gives me a big X mark right there. And a comment that I had made was we'll have to evaluate as price retraces or breaks above the highs. I'm not going to be suckered with traps. A lot of people were, and that's the area just over in this area right here from the other chart. And my first area that I would have liked to have bought was in here because you're cheaper, obviously. And up here was the other level that you'd seen. That's right there. And you can see what price did there. It came back right into that level and then went on its merry way, and obviously there's been some more problems there as well. But these were just the plans that I had, and give me an X because I didn't really do what I would hope that I would have done. Explore FX futures for day trading. I give myself an X as well for that because I didn't look at trading Forex, the FX currency futures one bit. And really the reason why I didn't is I'm not shooting for scalping ticks, okay? I'm not looking for 4 or 5, ticks on a move. Day trading, you're looking for 20, 30, 40 pips. And swing trading, you're looking for, 10s to 100. Hundreds, all right? A couple hundreds. Or, get up to the thousands when you get the good moves going on. And here's a great thing about spot is I can trade, for example, if I've under the impression that the Aussie is strong, the Japanese yen is weak, right? I can play those two together. That's not something you can really do in spot forex. In currency futures. You can't do this, right? I can pit mostly any pair against another pair and trade it, And that's what's one of the reasons why I didn't even bother. I found there's more opportunity for me as a trader in trading the spot, and it also gives me the opportunity to utilize some of the more macro pictures that I look at, or I'm starting to look at, or have been looking at as the year progressed last year. And you know what? It was good enough for Soros 1992. That whole thing that he did with the Bank of England, that was not in futures. All right, that was in the spot market. So it's good enough for him. I think it's going to be good enough for me. And so that's why I didn't bother with Forex futures. And quite frankly, I'm not even going to bother thinking about it for this year. I know some traders love it. Some traders don't. But for me, I'm pretty happy going on the whole spot route. What else did I want to do? I wanted to continue expanding my knowledge of supply and demand in the markets and utilize price movements at all levels. I should say all levels, just as levels. And I'm very, very proud of that. You know, there's so many different ways to trade, right? There's so many ways to skin a cat. And you use what makes sense to you. And, you know, NetPicks, we have the 7 Summit Trader, which has done very, very well in the markets. We've got the Keltner Bells for longer term strategies. We have the Ultimate Swing Trader. You know, there's so many different ways that you can trade. And I like to expand, you know, my knowledge. And one thing I want to focus on, and if you head over to the Trading Tips part of NetPicks, netpicks.com/trading-tips, I believe, you'll I've made a lot of posts, and I showed videos, and I've shown that I took the trades. You know, a lot of companies out there, they say they trade, but who knows if they do or not. You know, they'll throw up some back-tested MT4, you know, results or something. But one thing I dig about NetPicks is these people here trade, and can't argue with that. You know, we lose like you lose, and we win like you win, and face the same demons because we actually trade, as opposed to just say that we do and just talk the game. But you know, for example, the Aussie US play was all price points, market structure, right? That's what it was. It was how the markets move. And I looked at the macro pictures. I looked at the economic backdrops as well. A lot of things went into play with there, and it was just trying to find out where to get in the market, and just using basic, you know, horizontal support and resistance levels, and sentiment, and I'm going to cover something else in the one of the other slides. Whoa, hold on a second here. One of these other slides. Continue to expand knowledge of market microstructure, and I'm going to explain that later in another slide. But I'm pretty happy with this. You know, I pretty much chopping indicator usage to a bare minimum. I want to expand. You know, I want to keep learning and moving forward, and that was something I've always wanted to do. Something I planned for 2011, accomplishing it, and 2012, accomplishing it. So just keep moving forward. Right? It's never ending. It's never ending to learn. You know, you don't want to think that you know it all, because you don't. So now what? You know, look, bottom line is the Forex, it moves on sentiment, all right? It comes in flavors, short, long term. And what I mean by sentiment is just, you know, what are traders looking at on that day? What are traders looking at the week, the month, the year, overall, big picture, little picture, right? For example, even though I was long on the Aussie US, I could still day trade when the sentiment was short for the day, was going down for the day, where traders were a little bit more, you know, wanted to pour their money into the US dollar as opposed to the Aussie. So short terms, like the day-to-day activity, the news, the rhetoric that comes out, you know, what are the traders thinking? And you can usually get that from the headlines, right? Bloomberg. You can just see it, and you know, not necessarily news releases so much, unless it's, you know, horribly bad. But that just gives you better opportunities to get in the market if you're not trading them. But so just the sentiment for the day. Now that can switch depending on what comes across the wire, and I do listen to a news feed. I don't trade the news, but just to keep an ear out if something is coming across that could change the way the day's going. And the broker that I trade at, it offers a sub account. So if I'm holding positions long, for example, in the Aussie US, I can still short the Aussie US without eating away at that position. All right, it's a whole hedge thing that's going on. Longer terms, the macro picture, the economic health of the country, the debts, Greece, hello, interest rates, credit rating downgrades, just the items that affect on a larger scale, right? These are what are allowing the longer term plays. When you've got the bigger picture in your favor in your trade, it allows you, and it takes a lot of that burden off to babysit the trade, and you just tend to be able to sit through a little bit of the sentiment that goes against your trade, because in the bigger picture, it is what it is. It's still in your favor, and that's what happened with the Aussie US. And then what happened? There were some issues with the with that affected the Aussie, and then we started seeing some pretty big retracements coming out. So just doing that. So just learning more about that, and being able to play those and trade those. And the great thing about that is when you get it, and when you're in the process of getting it, and when you're expanding on getting it, it just allows you to have higher probability trades, and we can't argue with those. This is the DX, the dollar index, and for you that don't know, it's basically the U.S. dollar measured against a basket of currency pairs. Mostly the euro-U.S. dollar takes the biggest chunk of this. And look at this, what a roller. Look at this. Like, this is just all over the map. If someone was to say, well, what trend is this? What's the direction? Well, it's all over. You kind of have a downtrend here. We're in like a range here. Now, this is a daily chart, and it's zoomed. It's a big range. You could definitely trade it, but overall, what's it doing, And then move up. It's just horrible, right? But we all know what's been going on. The U.S. is in some pretty heavy debt. Other countries are having those same kind of issues. Canada, my home country, we're doing pretty good, so I'm quite happy with that. And when will this change? We're looking for stability. The thing is, when we were asked about our outlook for the year, it's very hard to say. You can do it more on a short-term kind of basis, but these things can change on a dime, And there's also these things that we don't know what's going to happen. Like when 2001 happened, right? September 11th. No one saw that, out of the blue. And then, things change on that. So you cannot predict it 100%. You like to think when the good times are rolling, they're going to continue to roll, but they always don't, right? Nothing is always definite and ongoing. There's always going to be a blip that comes out. So for me, a shorter term time span of looking at things is great. And just like I said, just keeping in tune for me with what's going on out there. Is Greece finally getting, is the act together? Is the euro going to be dropped as a currency? All that kind of business. Just keeping your eyes open and watching what's going to happen. There's a lot of news feeds out there. I don't look for the opinion of somebody else. I look for the fact, and just take it from there. But you can see, hopefully we're going to have some smoother trading, because this is kind of crazy. And if you happen to tune into the webinar we did, if you're an owner, back in 2010 when we were in Las Vegas doing it, I had actually brought up, I believe, a dollar index chart, and it just shown where the reversals happened and where they were pretty much going to happen again. And you can kind of see where they happen. Okay, you know what? That's not part of this video. I don't want to get into that because that's a whole different ball of wax. However, there are a few things that are going on out there. Just things that I found kind of interesting. China, for 15, 20 years, things have been outsourced to China because it was cheap. Well, what's happened over the years is, the wages are going up. Things are getting more expensive. Transportation costs are going up, right? Obviously, because fuel's going up as well. It's not as, it's not a no-brainer anymore that when you're opening a company, you're going to ship it off to China. It's a no-brainer anymore. It's not a no-brainer anymore. And a lot of companies, manufacturing, manufacturing used to be huge. I live in Ontario, and we used to be a hub of manufacturing. Not so much anymore. But a lot of companies are out thinking, rethinking their entire outsourcing idea. Now, I'm recording this the day after, and I also heard the president's speech last night where he was actually talking about this particular thing about, tax breaks for companies that send their work out elsewhere. They don't get tax breaks anymore. Now that's a whole different ball game altogether, and the issues that can cause. But I'm not going to get into that here. But just a bigger picture looking at things, right? So it's quite possible that China will, some of this manufacturing is going to come back to America, hopefully to my neck of the woods as well. And what does that mean? Well, it's good for the economy, that's for sure, right? It's good for employment, right? It's good for job growth. All that kind of stuff is positive news. Like I said, it's not as cost effective as before. The wages are getting higher now. Nothing compared to wages in the States or here in Canada, especially union wages. We're talking, a fraction of that. But one issue as well is that it could lead from China to other countries and not necessarily come back to North America. But some probably will, and some already have. Also here, Mattel had a lead issue, cost them $30 million to recall, right? So think about it that way. What's it costing them as opposed to bringing it back? However, like I said, some jobs may come back to the U.S., which is going to do what? It's going to improve the economy. It's going to drop down the unemployment rate. And what's it going to do? It's going to boost spending. What happens when you boost spending? Inflation comes in. What happens with inflation? Generally, to combat it, what do Feds do, right? What did the Fed do? They usually put up the interest rate. And what does that do? Makes people start to save more instead of spend more, and just makes your currency a little bit more attractive to people who are looking for longer term plays. Anyways, that was a mouthful. High tech. We always talk about this as how things are going to the green energy, but we have seen what happens when government gets involved in this and start lending money. Look at Solandra. It didn't go very well, did it? That was $500 million wasted. But jobs that are focused on the higher tech items, like the energy sector, can be created in the U.S. and here in Canada, right? That's where we could do really, really well. So the bottom line, like I said, is a stronger economy, a stronger currency. And once you get that kind of stuff, well, things start looking up. But we do still have these huge debts and deficits to deal with. And that's not going away anytime soon. Here in Ontario, they're talking about downgrading our credit rating just because the government we have here in Ontario is just spend tax, and you just can't do that. And if they're going to downgrade the credit rating, what's it going to do? It's going to cause high interest rates on our debt. So it's not just one thing that's going to fix everything, right? It's got to be the accumulation of everything. And you know what? Bottom line is we are all going to have to pay a price for that. We're all going to have to remember that, hey, you know what? The days of freewheeling are over. And if we're going to smarten up and hope our next generations have a better life, we better start doing the heavy lifting now. Taking that term from Troy, heavy lifting, so things can get a little bit better. But anyways, so what I'm looking for are signs that indicate a sustained path of growth has returned. What do we hear? We hear good news, we hear bad news. We hear good news, we hear bad news. We hear good news, oh, Greece is good. Oh, now we got this, now we got this. That just causes, like we saw in the, this is what happens, the roller coaster happens, right? So we need the news to come out that's going to be, this is sustainable. We can actually get by with this. And I'm looking for that, because when that happens and you get on those right side of those longer term plays, you look at those, 7, 8, 900, 1,000 pip moves, it can happen, right? And if you're looking at the higher time frame charts, because that's where you're really going to notice it. You can time your entries down on the lower time frames, but the higher time frames are where you're going to really see where the liftoff can really occur. And that's what I'm looking for, because there is nothing finer than having those trades. My thoughts, utilize market structure to benefit from changes in the fortunes of certain pairs. We see this is the pound US. Look at this. Like a coiled spring. There's going to be a way it's going to break up. North looks pretty good, right? There's a lot of room to run up there. There's some levels to break, and when these break and Sentiment changes. Everyone that was looking to maybe buy the pound US, and these start breaking, what's going to happen? They're going to get into the market if their orders are sitting here, and what's going to happen? They get stopped out. It's just going to drive it down further, depending on how things play out, right? How the sentiment goes. Is it going to be in favor of the US dollar, or is it going to be in favor of the pound, right? And that's what I like to see. By looking up here, there's going to be some orders already placed up here. And what's just above this line? What do you think is above this line? Stops, right? When these things get targeted, it's going to be some interesting trading. This is the Aussie US. Once again, I'm looking, hey, you know what? Maybe I can get something else out of this. Maybe I can milk this even more. It's kind of ugly right now. I should update this line right here. It's beginning of the year. I really haven't taken much action on these longer term plays, and I'm really looking forward to doing that. But this is the kind of stuff I like to see. I like to see these where the price is compressing, all right? Because sooner or later, buyer or seller interest is going to take over, and this is where you're going to, hopefully be on the right side. Sentiment changes, and this starts moving up, and there's orders here. Getting into this market before it busts up. It's a nice way to be. And this actually over here is, these lines are old. This line here is old. This is not old. This is, well, it's kind of old. But, and this is just measuring some stuff out. Like I said, I'm not going to go into this. I'm not going to be calling signals or anything like that. Just things I'm looking at and some thoughts. But all these thoughts come from my whole plan of just learning more about the microstructure of the markets, how it moves. Now you can't go to Amazon or Indigo or wherever and buy books on this. There are some papers out there and that you can read. Look for Oslo and some really good information there. And just look at the charts and just you look at logic. And we're going to talk about that right here. Test of time. This is actually a screen capture from something I had done, another article I had done. Just capitalize on the behavior of other traders. What's going to always stand the test of time is doing the opposite of what most people do, or knowing what most people do and taking advantage of that in your favor. Riding stop hunts where big traders can trade, and riding where changes in liquidity occur. And what we have here is you see the price goes up in here. You see where the opening high, and then you can see the close right there, right? And what happened here, what happened is this is a resistance level. People bought into it. Now, big traders, they just can't trade in the middle of a move, right? They just can't trade anywhere they want, right? If they want to unload a position, they start selling. If they sell in the wrong spots, what's going to happen? Their profits are going to get eaten away by slippage, and that's not what they want. So what do they trade? They like to trade and open and close positions where a lot of liquidity can take place, where a lot of the orders are sitting. And when you follow that kind of a mindset, and I've actually shown a few of those trades on the, like I said, the Trading Tips blog. These are no-brainer trades. These are trades that you get into and you don't have any heat, right? And the profits can come pretty fast. I've seen 70, 80 pip moves in a matter of hours with six pip drawdown. That's nothing, right? And like I said, they're high probability, and just knowing sentiment, et cetera, because the big traders, when they got to unload positions or buy, they just can't do it anywhere they want. They got to target certain areas. All right, this actually was just a screen cap when I was talking about looking at bigger pictures. So test of time, when you start focusing on how the bigger people trade and what they look for, like stop hunts, they occur, right? Not from your broker, right? These are usually run-ups from the bigger players, and when that happens, they can be pretty sweet. So those kind of things. For me, the biggest thing is simply this. I read this before. Take the easy ones and don't do anything stupid in the meantime. How true is that, And preservation of capital, because once our capital's done, our trading business is closed, and you have to find something else to do. So that's the key. So I hope you picked up something from here. Takeaways from this is, look, I don't have a big 2012 grand scheme of selling gold and riding it out for the year. For me, it's going to be basically a week to week to week sentiment thing. We're in some pretty odd times right now, and let's just see how this is going to play out. So in the meantime, shorter swings, I'm all for, and some day trades when it's good trading. Other than that, I'm just going to stick with the currency markets. It's done me well. My broker, I don't pay a whole lot in spread costs, and a lot of my trades are longer term, so spread costs are absolutely meaningless. And it's just, for me, it's a relaxed way of trading. I don't need to be in there on a 1 minute chart scalping out ticks on the FX futures. So anyways, hope you enjoyed this. Hey, it was fun doing this. Okay, so all the best.